So first, we just want to thank everyone once again for joining us via the webinar and our streams. Hopefully everyone is enjoying the weekend. Just a quick recap of last week, and then we'll jump into what we're looking for this week coming up. Markets did end the week lower, with the NASDAQ taking the brunt of the hit, being down about 6%. The S&P 500 down a little more than 3%, and the Dow, strongest of the three as of late, ended lower by about 1%. Two things to discuss from last week: the Fed and employment report. First, the Fed did what was expected with a raise of 75 basis points. The question is what happens in December. The Fed statement at first seemed a tad dovish, which we initially saw in the markets with that quick uptick. But following the Fed chair presser, we did see markets with a downtick and the commentary from Fed Chair Powell to be quite hawkish. The question came out to us: is this a game of good cop, bad cop going on? With the statement dovish, yet the Fed coming out, the Fed chair coming out, basically throwing water on that flame and being a little more on the hawkish side. Time will tell. I guess to everyone, I guess that wasn't really the most important Fed meeting, since we are still wondering what is next. One other interesting aspect: we had a few Fed speakers on Friday that started to toss the possibility of a pivot. Is this the same thing that happened last time with the transitory aspect of inflation? Who knows, but we will find out soon enough with the CPI data coming this week. On Friday, we also had the employment report and payrolls, which came in higher than expected. We also had the JOLTS number, which is one of the previous Fed, Yellen's key inflation and economic data point, which came in higher than expected. When it comes to the employment side of the Fed, it continues to outperform, which gives some credence to the possibility of a soft landing if we are or going into a recession. What we're looking to see is, with recent headlines of layoffs, how would that affect future reports coming up in December and the following months? So we'll see the impact of these recent layoffs that we've been seeing through some big companies, and how that will affect, or if it will affect, any future employment reports. With earnings season slowly ending, it's coming back to the Fed and economic data. With the Fed blackout period over, we do expect the lists of Fed speakers to grow again. This week alone, we have at least 9 scheduled speakers. As always, keep in mind, members, that number will increase as we do have interviews and media. Correction, sorry about that. We have interviews and we do have some media conferences coming up this week. So we'll see if that number grows. And as always, check the morning to get an updated list on the Fed speaker side. Economic wise, this week, in our opinion, it is all about the CPI data, which comes out on Thursday, which will give us a better indication of current inflations. So taking a peek at your week ahead, some of the upcoming US and world events. Not that busy of a week this week. We have a few big earnings left. We have Disney, DIS, Lyft, LYFT, Mosaic, MOS, Occidental, OXY, Roblox, RBLX, Ralph Lauren, RL, Take-Two, TTWO, Wynn Resorts, WYNN, which has been seeing a pretty strong move as of late. Taking a peek at some of the US and world events throughout the week. On Monday, Fed speakers, Mester, Barkin, and Collins. We also have the EU finance minister meeting in Brussels. On Tuesday, the Eurozone retail sales. We have China CPI and PPI, and we have the general election for House and Senate. We'll be mentioning a lot about that because that does add volatility to markets, as we will be updating in regards to if anyone or who will control the House and Senate. Wednesday, we do have Fed speak from Williams and Barkin. Thursday, we have your all-important CPI data in the US. More Fed speakers. We have Waller, Harker, Logan, Mester, and George. And on Friday, we have the consumer sentiment, Germany's CPI, UK's GDP. And keep in mind, members, it is Veterans Day. US markets are open, bond markets are closed. Company events for the week, as always, top shareholder meetings and analyst investor calls. If anyone ever has questions regarding this and or the conferences, you can always shoot us a message in the Ask the Desk portion of the news desk or shoot us an email. These are the top conferences for the week. Throughout, it's a little bit busier than last week. Taking a peek now at the calendar for the week. Monday, consumer credit. It'll be interesting to see how the consumer is doing on the credit side in regards to recent market activity. We have Fed speakers Loretta Mester, Susan Collins, and Tom Barkin in the afternoon. On Tuesday, you have your general election for the House and Senate. Wednesday, Fed speaks from John Williams and Thomas Barkin. Thursday, we have your all-important CPI data at 8:30 a.m. Following that, we have Fed speak yet again. Patrick Harker, Lori Logan, Loretta Mester, and Esther George. On Friday, we have consumer sentiment, which we'll be keeping a close eye in regards to the consumer in these markets. International top economic calendar for the week, not that busy as well. Earnings. As always, we do bold out some of the bigger name earnings throughout the week. The list is large, continues to be large, but we did see a little downtick in the amount of earnings coming up for the week. So we are seeing a slowdown moving forward following this week. Your fear and greed index continues to be on the green side, 58. Last week we were at 60 with a previous around the neutral. So we are on a more neutral greed mindset in regards to the fear and greed index. Your weekly sector performance, continuing to see weakness, but energy continues their strength. We'll go later on to see how they continue to control the year-to-date on sector-wise. But we did see weakness a lot in communication services and technology, also in consumer discretionary. On the green side, we had energy, industrials, and materials. It seems like a lot of the move in the industrial material side happening on the Dow side, as we've been seeing earnings-wise on the Dow components being a little stronger than overall look in markets these days. NAC comparison, as always, this is your COVID. We are seeing a downtick from last week. We did see a little uptick as of the past few weeks, but seeing that downtick continuing. We added the Fed funds effective rate, giving an idea of current Fed funds compared to all the years back to 1955. The grayish indicate recessionary periods. As you can see, it does not show during our time right now, but we are seeing a little increase going back to the 2000s, late 2000s levels. Target rate probabilities for the December meeting, currently 50-50 on a 50 basis point to a 75 basis point hike. Your 10-year Treasury constant maturity minus 2-year is at minus 0.49. Year-to-date returns, we did see a big uptick in nat gas, up about close to 20%. Heating oil up about 6% for the week. VIX, even though with the market weakness, the VIX still was lower on the week, which is quite interesting if that is considered a volatility index. And we did see such weakness in markets overall. Crude oil saw an uptick about 6%. Gasoline as well, an uptick about 9%. Corn basically flat. Wheat, a small uptick, and platinum turns green for the week, up 0.16%. Regarding other commodities, gold, we did see an uptick as well in gold and silver. Copper as well. Copper had a big bump, about 6-7% on the week. Coffee, not much of a move. Cotton, though, interesting, up 13% on the week. Still down 23% year to date, but we did see a very strong uptick in cotton throughout the week. Your AAII Investor Sentiment Survey continuing on the bullish side, seeing these numbers 20, 22, 26, 30%. The number continues to grow on the bullish mindset. Bearish mindset as well, dropping from 56, 45, now only 32% on a bearish sentiment survey view. The neutral mindset as well jumped big as well at 36.5%. So it's interesting to see the strength in your sentiment survey correlating with the volatility index being lower, but markets showed extreme weakness for this week. So it's an interesting correlation between the mindset of the traders to the actual action in the markets as of late. Taking a quick peek at your sector outlook, energy, the only one that's still strong, up 66% year to date. All other sectors are in the red, with communication services down the worst, down 43.03% year to date. You have a few IPO lockup expirations coming up on Monday and Wednesday. Your expected IPOs this week and your FDA calendar, a little busier this week, but as always, we'll be adding these to the morning mashup. And if we ever see updates, we'll be adding those as well to that list. Now a quick peek at some charts. We'll start off with gold. Gold, as you can see, we did no changes to the chart. Gold with a strong move on Friday, ended right at that downtrend, literally on the downtrend. We'll be watching if that continues during the week. We have that 1600s level support that was tested quite a few times as well. And we have that upside at 1700 we'll be watching. If we do break this downtrend, that level could be tested. But as always, volume, members, we want to watch the volume as that is key on any break of a trend to the upside or downside. But gold, as you can see, with no change to the chart, tested that long-term downtrend perfectly. Your SPY on a daily, no changes to the chart. Last week, we reported we added an uptrend, which was added last week, which was broken this week. Once that was broken, you can see the move down, testing that 370s support and closing right below the 380s resistance level. So we'll be watching that this week for that 370 support, 380s upside, especially following that CPI data on Thursday. Looking at your NASDAQ daily, no changes to the chart. We mentioned last week that without volume, a defined move is tough, and that is what we saw. We mentioned last week that the volume in the NASDAQ on this upside move was not there. It was lower than usual, lower than an average basis. So we kept a close eye to see if that volume could come in this week to continue the move to the upside. But as of right now, that is not happening. We've tested our short-term support levels of 10,005s, which was right here. We closed right below it for the week at 10,475. So we're watching that upside move. But the range of the NASDAQ is pretty big. You have a 10,000 to 11,000 range, but volume is key on any upside or downside break. SPY daily, a more technical view with moving averages. We are starting to see a little of the long-term moving averages trying to level out. But other than that, your short-term and very short terms are turning more cautious. So we are watching these levels going into your CPI data for the week. Triple Qs on a weekly. We are continuing to see a downside look on a weekly basis with that test here, which we believe is very key. Previous lows on the triple Qs. So we are watching that level very closely. As we all know, a weekly chart is a more broader look when it comes to a technical analysis. So we are watching this level very closely if that is broken to the downside. IWM weeklies, we did see that double test bottom on a weekly look. We are watching this very key as well. It looks like a lot of very key levels on the weekly charts that we'll be watching throughout the week. But the IWMs are very key at this point around the 160s that we'll be watching closely. 10-year yield weekly continues to trade right by highs. All indicators, all moving averages continuing to move to the upside, even the short-term ones. So we're watching these very closely. A more detailed look on your 10-year yield. We added a short-term downtrend since it is looking to be building a pattern here. As you can see, the 4% level continues to be in play. Bullish traders are seeing this chart and excited for the next move. If we break this downtrend, we could see a test of that 4.5 level on your 10-year yield. But we are watching a continued move. Since this is a weekly basis, we are going to be watching if this continues to trade below this downtrend for a more defined a technical pattern being built. And once that happens, we would see a bigger move. But we're going to keep an eye on it this week, since we do have that CPI data on Thursday, and we'll mention if these levels are broken. Diamonds, the daily look, building a pattern as well, some sort of a wedge at this point to the upside. But we are watching these moving averages. They are trying to level out, as you can see, even with the 100-day trying to level. But we'll see the action this week if these are broken and moving averages show a different direction. IWM dailies, no changes to the chart. We ended the week right at that resistance level at the 179s. We are watching this point, as we mentioned earlier, this key level here, members, as you saw in that weekly chart earlier, how much room to the downside could possibly have if these IWMs are broken. But for as of right now, we are trading in a range, and we are trading right by that resistance point at 179. HYG weekly as well. All moving averages are to the negative. But we are watching the support level around the 71, 72 in regards to any directional move. S&P 500 daily. The downtrend from October of last year is still in play, which was tested very nicely all three times. We are watching the support resistance levels throughout the week. That 3,800 resistance is a level on watch. We did close below it this week, but we are watching that level for a possible somewhat of a range being built, like here at a higher point. If not, we could test that 3,600s, and that key level still is at 3,400. Your VIX weekly continues to be in a very tight range from the 20 to 35s, and this is going back to the beginning of the year. This is the VIX weekly. Looking at your oil daily, we mentioned last week we are watching this downtrend for a move to the upside. That downtrend was broken last week. We mentioned to keep an eye in regards to a directional move to the upside, and what happened? We got that directional move to the upside. We ended the week at 92.60. And currently the support level is very short, is at the 90s, with resistance at that 95 point. If that level is broken, we could see the testing back to that 100 level. But we are watching crude oil at that $90 level real quick. US dollar daily. We mentioned last week, no change to this chart as well, members. We mentioned last week that the US dollar tested the uptrend and that a close watch is back in play. What happened again? Yet again, we tested that uptrend. So it seems like this uptrend is being tested on a technical view. As it's being tested and selling off, you're seeing that the bears are in control as of right now in the dollar. We'll be watching this around that 113, 114 resistance, and keying in on that 110 support level that we've been seeing testing and bouncing off of for the past few weeks. Bitcoin, no change to the chart. Bitcoin did break above that level a while ago, that 20,000 level. We did build that flag pattern to end the week above 21,000. So we continue to see 20,000 as support. We were not seeing the volume we expected on this upside move. We continue to watch 20,000 support and 22,000 previous move as a short-term resistance. And a last look at the SMH daily, members. We are watching this because this is clearly one of the key movers in the NASDAQ overall. We are seeing a lot of moving averages to the downside, but the 200-day moving average continues to move upside. So on a long-term view, we are seeing that bullish moving average continuing higher, but the short-term ones are crossing yet again to the downside. Members, once again, we want to thank everyone as always for joining us. We'll open it up for a few questions. We do have a few questions as always that are being sent to us via our members via email. So we'll jump to those real quickly. One of the questions, as always, is our thought process moving forward for the week. With earnings season slowly coming to an end, I think we were around 80 to 85% of earnings season completed. A lot of these small cap names are being released this week. A few of the bigger names as well that we'll always focus on because those do impact the market on a more broader basis. But when it comes to this week, it seems like it's back to the Fed and back to inflation. We have the CPI number on Thursday, which is, in our opinion, one of the key indicators that, in our opinion, that is the only thing that matters these days is inflation. That number will be key. Will it come in hotter than expected? We'll see on Thursday. And I believe that that will dictate our move moving forward going into the holiday season. As always, members, we do have Veterans Day on Friday. The U.S. markets are open. The bond markets are closed. So when it comes to the week, we're watching Thursday. And as always, you have a slew of Fed speakers scheduled for the week. And as of late, it seems like they are the ones moving these markets when in reality they shouldn't be, but they are the ones moving these markets. And we'll see what their feedback is especially following that CPI report on Thursday. And as always, we will be uploading this webinar to YouTube and posting it in the news desk. Last week we did have a little issue with that. Hopefully this week we won't have that issue. So like I said, if there's any, we'll go radio silent if anyone has any other questions. Throw them in the chat box, and we're going to go over our questions via the emails. We had one question. We sent an email out over the weekend regarding our affiliate program. Someone had a question regarding that. Members, we just want to let you know we did update our affiliate program. We've had a lot of people ask us in regards to that. We do have our own TradeXchange affiliate website now, which has their own portal, which all our members can track any of their referrals on the affiliate side. We do appreciate all the positive feedback we've had on that. But yes, that we'll be sending out another update regarding that as well during the holiday season. And I think that's it for the week, everyone. We want to thank everyone for joining us this week. Enjoy this, for those on the East Coast, enjoy this weather. Who would have thought being 70 degrees in the beginning of November? But enjoy the weather. Enjoy your Sunday. Check the news desk, as always, to get yourself ready for Monday morning. And thank you again. TradeXchange out.